Hey, good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Tuesday, February 28th, and we're going to jump right into it because we do have a few important economic news releases scheduled for today. The first item to note will be the January's numbers for durable goods orders. We had 3.2% upwards in December, so it's a good month in December. We figured it'll pull back a little bit down to negative 1.3, and actually went back a little bit further down to negative 4%. So not as good. We did pull back, but a little bit more than we expected on the durable goods orders. Now on the Case-Shiller home prices, we were back in November. We had a negative 1.3%. And basically came in for December at negative 1.1. So we had another drop in home prices in December. I do think from being in the trenches, you'll see, at least from where I live in the South Bay here in Southern California, we are seeing a lot of improvement. So we've been kind of busy, and some of the national numbers I think you might see kind of are relatively close because as we saw in January, the numbers for existing home sales and for new home sales were up in January. So you may see some improvement come next month when the Case-Shiller shows for January and hopefully even for February. So you may see some improvement in that here in the coming months for Case-Shiller. Next item to note is the consumer confidence for February. We had 61.5 for January. We figured go up a little bit to 65, and actually exceeded that. So people are feeling a lot better right now. It's at 70.8, and that probably explains why people are buying houses right now, as we saw, as I mentioned in January, for people buying the existing and new home sales. So that's why you're seeing a little bit more activity there, as well as we've been kind of seeing some more activity on the Wall Street too. So the market's been up a bit now as well. So speaking of such, we're going to jump over to the headline news, and stock market's up a little bit. There's no big fluctuations right now. Like the last 2 days, there hasn't been any large fluctuations. They've been kind of pretty tame, but they're showing up upwards a little bit. The trading's been actually kind of low. Next one is Italian borrowing costs are a bit lower, so they're down to about their bonds are down to about 5.5. As we said before, they're over 7%, which is kind of unattainable for them to kind of maintain that type of payments, and not basically a default. So that's kind of in good news right now for them as well. Another item to note is oil is now at 108 per barrel, so expect to see obviously higher prices, maybe even what we saw, most likely $5 a gallon for gas here. So be wary about that as well. Let's go over and see what the bond prices are doing and how that's affecting interest rates. As you can see, we're up 6 basis points right now, and we kind of had upwards opening, and as you can see, we're also having a trendwards upwards. So if you can see the pattern, even though we had a couple of days that were down, it kind of follows a line of going upwards. So as you can kind of see, we're going this nice trendwards upwards. So which is kind of good news, which means interest rates are improving. Obviously, the higher up on the bond prices here, that means more demand and interest rates fall. So that's a good sign for interest rates. All right, folks, so know that interest rates are better today. We are above the 10-day moving average, as we see right here. And I'll catch you guys tomorrow. We do have some big news tomorrow with the GDP, the Fed base books coming out tomorrow. So those are just 2 items to note for tomorrow's, and these can be market movers tomorrow. All right, folks, have a wonderful day. And if you're on my website, please subscribe, get your free daily updates.